Today I want to go over my 13 favorite price action strategies and also small little hacks that will help you look at price action charts in a different way and trade price action more effectively. Now let's take a look at a more complex pattern, and here we have trend exhaustion. What we have is a double top, we have a strong uptrend, and then we have lower highs, which shows us the exhaustion. Here already there were signs that the market is failing, but going short here is obviously way too early. We don't have a lot of information. The market still looks quite strong at this point, but then we have a very strong selling period here. The market pushes into the new low. The market is pushed higher, but this time not able to get as high. Then you can see the market momentum is fading, and now we have a super strong selling sequence. We have 1, 2, 3, 4, 5, 6 bearish candles, and they're all very strongly going to the downside, which is very different than what we have seen here previously. We have seen hints of more selling here in this pattern, but it wasn't until the breakout where we are really seeing a lot of momentum kick in, and this is such an important signal of a market change. Then you can see we move lower, we retest the daily pivot point, we move lower, we retest the daily pivot, and we move lower. So you can see how we can nicely combine momentum analysis, exhaustion analysis, breakout strength analysis, and then also if you're looking for a pullback approach, use the pivot points. They are very helpful in this regard as well. Before we keep going, I just want to quickly let you know that I have started a free trading newsletter, which I'm sending out every Thursday. Every Thursday you get a new email from me with trading tips, charts, and other very important tips that will help you improve your trading. As a thank you, I'm also sending you a free ebook after you have signed up for the newsletter. The link to that is in the video description and also in the comments below. And now back to the video. And here a great continuation pattern. The market was here in an accumulation phase, traded around the moving average, which is a good sign of an accumulation, especially if it happens in a late trend. We have breakouts, and then you can see we have our first trending push above the moving average. Then the first corrective wave reaches into the moving average. We're not really breaking lower, but we're just pausing. Then you have the breakout, and again, a strong breakout, that is the key. And you always want to make sure that you wait for strong breakouts. They are the key to successful pullback and continuation trading. Then afterwards, you can see this is where the first sign was given. We have the small consolidation around the moving average. The trending period happens above the moving average. And then here, as the market trades longer around the moving average, this is then where we don't see a lot of strength anymore, but the market shows more weakness. Here you can see we have the strong breakout through previous lows. So this would signal then probably a change to a more seller-oriented market. We would look for pullbacks into the previous support and also the moving average to try to get in on the short side. Deceleration, and this is a universal concept that you can use on all markets, all time frames, and I think it really helps a lot. And deceleration refers to the candle size and the change in candle size. Very often what you see is that on a retest, for example, you initially move lower with a lot of speed. You can see the candles are getting larger here. And then as the market is hitting the trend line and also previous support, the candles are getting smaller. This is what we're referring to as deceleration. So the momentum is dying down. This does not show a lot of strength, obviously, and this makes a breakout through the lows here less likely. And especially then afterwards, you can see the market is then picking up more momentum. The candles are getting larger and larger, which is a good sign because at that point, it is more likely to see continuations away from that. So if you see candles are getting smaller into a support and resistance level, that's a very important tell. I have a few more examples on how to use deceleration and acceleration. This is a different concept. It also ties in with deceleration. We can also call it exhaustion. What you see is that during the strong downtrend, the candles are quite large and red. And then as the market moves here into the lows, this is the daily 50 period SMA, so a very important moving average. You'll see that the candles suddenly are getting larger wicks, which shows that there is more rejection happening in the market. And also you can see the candles are getting smaller. Here, this is a very important tell. We are making a double bottom, so the market is not able to push through the daily 50. And especially after the long selling period, you can probably expect a lot of traders take profits. And if there are not a lot of sellers left and the sellers that are in the market unwind their position, they're offloading their positions to the buyers. And then you can see the market is accelerating to the bullish side. So a very, very different picture. And one of the most important things in price action trading is not just focus on specific patterns, specific candlestick formations, but really look at the whole story that the price action and that the chart is telling you, because this is how you really understand what is going on in the market, and you can apply this knowledge to all the different markets and all the different time frames. Here we have a breakout buildup, which is also among my favorite setups. So the market is in a downtrend. Here you can see if we put a RSI or MACD or stochastic, you will get a divergence. So the market is not able to push lower as easily. Here we have kind of a fake out. So we do have a breakout attempt that immediately gets rejected. We move back into the previous highs or in this neckline. You can say this also resembles like a inverse head and shoulder. Then the market trades underneath the neckline. However, the market is not pushing away from this area, and whereas previously the market hit the same price level here and it sold off very, very aggressively, this time it's very different and the market is really staying underneath the level. This shows you that there is a lot of buying interest and not a lot of selling interest. And this is such an important insight into the market. And if you then afterwards see the breakout, this is a high probability breakout scenario because the breakout is strong, but what has previously happened here over the last 10-15 candles is even more important. This shows you the gradual transition to a more buyer-dominated market. Here we are looking at a complex pattern, so we have a change. The market was in a downtrend, then the market broke above the resistance, it tests as support twice, and we also have the concept of deceleration, acceleration. We have here strong selling candles. Then at the level we have a neutral candle, so just a doji with a very small body, and then the candles are getting larger. So we have deceleration, the pause, and then acceleration. The market is accelerating and picking up momentum. And especially if this happens at a previous resistance that is turning into support, even better. This can often foreshadow a strong trend impulse and a strong trend shift. So those first pullbacks, when the first time the market made a higher low and also is breaking above a previous high, so the market is making a higher low and a higher high, and then you get the price action confirmation, this is a very good setup to study. The spring pattern, also some traders may refer to this as a fake out, is a common trend exhaustion pattern. What you see is that the market is in an uptrend. The market is already trending higher for a long, long time. We made this triple top here. The market spent quite a lot of time here trading sideways, not being able to continue. And then the market tries it one last time. We have one last push. The market doesn't advance as much as it did in the past. Then we put in the local high here. The market tried to break out of it, but we don't even get a close. We have a doji candle or a pin bar, which is a neutral rejection candle. And then we see the acceleration. So again, we have the speed building up. Then the breakout fails and the market is accelerating into the opposite side. Then you could say this is even something like a small lower bounce or breakout buildup. We have the breakout, break and retest, and then you can see how strongly the market shifts. If you are able to master this pattern, especially after long trending markets, you will often be at the origin of a new trend. And you can see when the market really tilts and when we roll over from a buyer to a seller market, those shifts often happen with a lot of force here. Here, very similar, what I've shown you before, we are using a long-term moving average, the 100 period. The market traded above the long-term moving average here, which marks a bullish trend. Then we have the offloading. So when you see that the market is breaking through a moving average and also breaking through previous lows and making lower lows at this point, and this happens with a lot of force, this is often a sign of a market reversal. Those strong pushes through support and resistance levels are really interesting to study. And if you find them in the right context after a strong trending market and after the market breaks support and resistance, this is a very important market signal. Then you wait for the rejection or the retest. And how does the retest happen? With acceleration and deceleration. The market moves very, very quickly at first. Then the momentum dies down. We have a failed breakout, so the market is not able to close above it. Then you can see we are accelerating to the downside. We have another triangle pattern, and then we continue into the new trend direction. This is another very interesting pattern that I really like to trade. So we have this very strong resistance level here. The market breaks above it and retests this area as now support. And then you can see how nicely this is rounding off. So this is once again showing us that the momentum is slowly dying down. The market is not able to really push into the new lows. And then here on the right side, after this pin bar doji, the market is slowly accelerating. The highs are moving up. All of the candles have pretty much higher lows. And this shows us the gradual turn. So those rounding patterns are really interesting. When you see that the market is pushing lower, but not with a lot of strength, and then suddenly it's not able to push lower, and the highs are moving up, that's a very, very important signal that you can also start studying. Those general momentum patterns, the rounding, the deceleration, acceleration, they can be very nicely combined with pretty much all of price action and chart pattern trading. They complement all other patterns or other techniques very, very nicely. Now let's take a look at the triple tap, one of my favorite patterns. And with the triple tap, we can see we have 3 consecutive lower lows, and each low is weaker. Whereas here, the market still showed a lot of strength. So the market pushed with a lot of force here and made a lower low. From this low to this low, obviously the distance is much shorter, and then from here to here as well. Not a lot of strength on the downside here. Then the market starts to make higher lows, and here we have the strong breakout entry. And just waiting for strong breakout entries can really often improve your pattern quality and your trade quality as well. Don't just go on breakouts that just barely crawl over a level, but wait for a strong momentum push. They often are a signal that the market is really turning from a seller-oriented and dominated market to a buyer-dominated market. So you can very nicely see how we can combine the different concepts, and those are really universal. They work for all the markets, all the time frames, and I would recommend test them out, give them a try, see how they help your understanding of price action, and I look forward to hearing from you. Let me know in the comments what you think, and then you will hear from me again next week.